Hello friends, welcome to the course on accounting and financial management. So in this session, we will learn about the bank reconciliation statement. Let's start with the introduction part. See, the passbook and the cash book, these balances may not always tally. Why? Because cash book is with the business or with say accountant of the business. However, bank passbook is the printout of banking transaction, right? That's why we can say that whatever the entry done in the cash book of the business by the accountant of that business, that may vary with the bank statement or bank passbook. Okay, now see, for example, when a person gets a check, he debit his cash book at the time of depositing it in the bank. However, the bank will credit the customer's passbook only after the check is clear. This might take 1 to 2 days. So we are very much aware, right? So for example, here is a passbook. Here is a cash book of say the company ABC Enterprises, and the accountant has got a check from his customer, right? And they had deposited that check into the bank, right? Once that check is deposited in the bank, we know for clearing it may take a time. Immediately as the accountant deposit that check into bank, he will debit his cash book, say 5,000. Check room amount is 5,000. However, bank after 1 day or 2 day, that will be credited in the account of that customer. That means what? Simply that there may be the time difference to clear the check that can result into the mismatch between the cash book and the passbook or the bank statement, right? Now see, this will result into the difference between the cash book and the passbook. The bank reconciliation statement involve reconciling the balances of the cash book and the passbook. So to clear the difference between the balance in the cash book and balance in the passbook, what we do? We do the bank reconciliation statement. We do prepare the bank reconciliation statement. Remember, what is the purpose of a bank reconciliation statement? Simply to clear the difference between the cash book and the passbook, we use the bank reconciliation statement. Okay, now see what the key difference passbook. See, passbook versus cash book. Why? Basically, see, in the passbook, what we do, we deposit whatever deposit, these are the credit part, and whatever the withdraw, these are the debits, right? In passbook, it is very much common, right? We are aware. See, in simply passbook, what do we, whenever there is a withdrawal, whenever there is withdrawal, these are the debits, right? And whenever there is a credit, it is called as deposits, right? So simply in passbook, deposits are credits and withdrawals are debits. However, in cash book, it is just a reverse, right? Deposits are the debit in case of cash book and withdrawals are credit. So it is like a entry. For example, you are sitting in a cash, customer deposit the money, right? When customer deposit money, you will credit to the customer's account, right? However, in the same way, your teller's account, the cash on hand account or the cash account will get debited. That means, so your cash on hand account will serve the purpose as a cash book, right? So I repeat, in the cash book, deposits are debit and withdrawals are credit. So we can say the entry, whatever deposit in the passbook will be the credit into the cash book, right? So similarly, deposit in the passbook will tally with the credit in the cash book. However, withdrawal, that is a debit in the passbook, will tally with the credit in the cash book. Okay, simply. So in a passbook, we say whatever deposits are there, these are the credits. Whatever withdrawals are there, these are the debits. In case of a cash book, deposits are the debits and withdrawals are the credit. So the cash book, where the entry is reverse of the passbook, we can say in the cash book, entry are just a reverse. Now see, in the passbook, mirror image, where the passbook is the mirror image of the cash book, where I can say that the passbook is a mirror image of the cash book. So the answer is yes. However, not exactly. See, thou both record the same transaction, but they reflect the opposite effect. For example, say, if a business deposit 5,000 in the bank, then in the cash book entry of that business, 5,000 will be debited, because whatever is the why we are debiting, simply whatever the withdrawal, these are debited, they are depositing into the bank. That's why in case of passbook, it is showing 5,000 credit, right? So we can say the transactions are same, but the effect are opposite. That's why we can say in the passbook and the cash book, they are mirrored to each other. However, Answer is yet, but they are not exactly, right? Because where one is debit, the same transaction is another book, it is credit. Okay, very simple. Okay, now see why there is a reason. The reason for the differences between the balance in the cash book and passbook. Why there are some reason, right? Why the balance with the cash book and the passbook do not match? Why? So that reason we will see. See, first reason is error or mistake. See, while recording the entry, banker or the trader's accountant, that is businessman's accountant, may make the mistake. Either we can make mistake or the accountant of that particular businessman make a mistake. For example, check deposited of rupees 2000, but the accountant has entered into the cash book 20,000. So it is a wrong entry, 2000 and 20,000. So 18,000 is a mismatch. However, it may happen that check deposited 2000 and banks cleared it as a 200. So it may happen. So in that way, we can see either banker's error or the accountant can make the error. Second is the time difference. So basically, these are the entry which do not require changes into the cash book. Remember, okay? So see first, check issued but not presented for the payment. When we issue the check, we means what? We, for example, we are the businessman, we are the trader, right? We are the customer of the bank. So we issue the check. When we issue the check, at that time, we as accountant, we will make entry into the cash book, because cash book is a part of accountant or a business, okay? And the passbook is part of the bank. So we will when we issue it, immediately we will enter into the cash book. So we no need to change into the cash book. Why? The entry which do not require change into the cash book. That's why we can say the check issued but not presented. When we issue the check, we will make entry into the cash book immediately. We will not wait whether it will be presented or not. That's why we can say the entry do not require the changes into the cash book. See, the business issue a check, record into the cash book, but the recipient has not presented into the bank. It may happen. See, for example, in cash book, we have issued the check. We are the accountant of one business and we have issued the check of say 5,000. So immediately when we issue the check, we will make entry into the cash book of 5,000. But that customer is not having time to deposit that check into the bank, into his bank. Right, that's why he may deposit in the bank after 2 days. So the 2 days time difference, right? So the business issue the check, but the customer or recipient has not presented it to the bank. So what will be the effect? The cash book show the lower balance than the passbook. So when we issue the check, we debit the cash book, right, for the payments. That's why we can say the cash book will show the lower balance. Next, check deposited but not cleared. It may happen vice versa. So a check is deposited into the bank and recorded into the cash book immediately. However, bank has not cleared that check. That may happen. For example, clearing time required for 2 days, outstation clearing. It may happen that the check is not credited due to some technical error. It may happen. So the cash book show higher balance than the passbook. In that case, no entry needed to remove the difference. Why? Because we have already debited the cash book, right? So once we debit already cash book, the passbook is not reflected. It is not reflected into the passbook. That's why we can say these are the entry which do not require changes into the cash book. Okay. So what are the reason for difference between the cash book and passbook balance? Simply, first is the error. Second is the time difference. For example, check issued but not presented for payment. Check deposited but not cleared. Both are the part of what? The time differences. Next reason is the transaction which are recorded by the bank but not recorded into the cash book. But however, these entry will require to changes in the cash book. Why? See, if there is a passbook and there is a cash book. Whenever bank debit the charges, automatically it will be part of passbook or the say bank statement, right? But the customer is not aware about it. So that entry we have to make into the cash book in the reconciliation, right? Now see, bank has debited the charges or the fee directed by the bank. For example, the checkbook charges, the ATM charges or other fee, but the businesses or the accountant of that particular trader is not aware about it. That's why he is not recorded that into the cash book. That's why we can say we have to manually make a correction into the cash book. Second is the direct deposit by the trader's customer in the bank. It may happen, right? Third party deposit into the bank. So customer deposit money directly into the business's bank account, but business is not recorded into the cash book. I am not aware that one of my customer, one of my supplier, one of my the sub supplier deposited in my bank account, right? It will immediately reflect on the into the bank statement or the passbook. However, I have not recorded that into the cash book as an accountant. That's why there is a difference. Third is the interest credited by the bank. So in case of saving account, right, we get the interest from the bank. So a bank will credit that interest to the saving account. But however, the business is not aware about it, right? So business has not recorded it into the cash book of the business. That's why there is difference. The interest debited in case of there is OD. OD means overdraft. If the business has taken some loan in the form of overdraft, right? So bank will debit the interest, right? It is our income. So bank will debit the interest, but that is not recorded into the cash book of the trader, cash book of the businessman or accountant's cash book. That's why there is difference. Amount collected by the bank on standing instruction. For example, the standing instruction to collect on his behalf, for example, like interest, dividend. For example, I am the businessman. I am having account in SBI and I have authorized them that to collect the whatever the shares I am having, dividend I am getting, you please deposit it in my SBI account. So my accountant or my businessman is not aware about it, right? Once it is credited into the bank, but I am not aware because I am completely different from the bank. So the cash book entry is not made. That's why there is difference. Third is amount paid by the bank on standing instruction. For example, I have an life insurance premium, right? It will be debited on say in November month. But my in November it will be debited, but it is not reflected into the cash book. Why? Because I am not aware. It is bank induced transaction, not the trader or accountant induced. That's why there can be difference into the passbook and the cash book. And lastly, dishonor of the check. So bank will debit the customer's account in case of dishonor of the check. It may be the return charges or it may be the amount credited before clearing the check. So that also we have to make a manual entry into the cash book. Regarding that also there is a difference between the cash and passbook. Okay, so these are the reason there is that's why there is difference between the passbook and the cash book. However, these are the entry which we have to make changes in the cash book for the purpose of correction. Why? Because see, these are the bank induced transaction and the customer or say accountant is not aware about it. Due to this, we have to make that entry into the cash book. Okay, for example, bank had debited the charges, direct deposit into bank credited the interest, bank debited the interest, amount collected on behalf of customer, that is inward amount to the bank account, amount paid means debit from the bank account, and dishonor of the check, it may be return of the check or check charges. Okay, so that are the reason which this will already affect the passbook or the bank statement. However, for that reasons we have to do some modification into the cash book because cash book entries are still pending. Okay, bank has done it at their end. Okay, now see, because see in the examination they will definitely ask you which of the following is not a reason to mismatch the balance between the cash book and passbook. Okay, so you can easily judge and mark the answer. Okay, now understanding the reconciliation. So bank reconciliation ensure that the cash book and the passbook reflect the correct balance, right? It identify the error and missing the entry. Okay, it will identify what are errors are there and what are the entry which are missing, right? Which like recently we have discussed. It ensure the correct balance should be recorded into the books. It help in determining the fraud or unauthorized transaction also. It avoid the misstatement in the financial statement. Okay, now see, preparing a balance sheet, how to prepare the bank reconciliation statement. So basically we can have two options, either we can start with the cash book or we can start with the passbook. Okay, if we start with the cash book, what we add or subtract, whatever the clerical error done, that we can either add or subtract depending on the circumstances. The credit entry shown in the bank statement but not appeared into the cash book, that we will add. However, the debit entry shown in the bank statement but not appear into the cash book, that we will subtract. If we start with the bank passbook, whatever the check which deposited but not credited yet, we will add them. However, whatever the check we have issued but not presented in the bank till, we will subtract it from the bank statement or bank passbook. Okay, so these are the way to prepare the bank reconciliation statement. We will see it one by one through example, then you will get again. Okay, no need to worry about the steps. Okay, so generally in passbook we have only two options. What are the checks which are deposited but not yet credited? We will add them. We assume that it will be credited. Whatever the check we have issued not presented for the payment in the bank, we will assume that it will be paid. So we will separate it. Okay, very simple. Passbook entries are less. Okay. Now see, what are the advantages of preparation of a bank reconciliation statement? Simply, it assists the management in verifying the accuracy of a cash book entry. It aids in detecting the error for a timely balance correction. It serves as the crucial control technique for the management oversight. It displays the accurate bank balance at any given point of time. It reveals the fraud committed by the staff which is managing the cash of the check, enabling the effective management control. Okay, so what are the simple advantages? Right, it is very clear, right? Using the bank reconciliation, we can maintain the accuracy of the cash book entry, right? See, using the BRS bank reconciliation, we can modify the cash book entry, so accuracy will increase. Obviously, if there are some errors done, that can be detected. Apart from that, the bank reconciliation is serves as the crucial control technique for the management. It also displays the accurate bank balance after the reconciliation at any given point of time. Also, if there are some fraud, that can be detected and prevented using the bank reconciliation. Okay. Now, see through example, you will get a better idea. See, now what they have given? They have given that the bank balance as per the cash book. What is cash book? Cash book is the book with the accountant of the business. So, as per the cash book, balance is 10,000. The check issued but not cleared. Check they have issued but they are not cleared, 500. Bank charges deducted 100. Direct deposit by the customer 200. Okay. Now we have to check. We have to prepare the simply bank reconciliation statement. Okay. Now see, balance as per the cash book is 10,000. Simply, whatever the check issued but not cleared, we have issued the check that time, but it is not cleared yet, right? So we have to, when we issue the check as an accountant, immediately assume we have to do the entry into the cash book, but we are preparing the reconciliation. That's why we are now, they are not cleared. So again, we are subtracting it. Checks we have issued but not cleared. That's why we are subtracting it. Bank charges deducted, subtract it. Direct deposit made by the customer, add it. Right? So it is very simple. When we are preparing the cash book, simply the negative thing subtract, positive thing add. Okay, that is basic rule. Okay. Now, for example, checks we have issued but these are not cleared, right? So we have the balance. So check we have issued, in the future it will be cleared. So in that way you remember only. Okay, so minus bank charges deducted, subtract, add deposit, so add. Okay, simply. Okay, so make it the plus minus using the simple calculator, right? So 10,000 minus 500 minus 100 plus 200, so you will get 9600. So your passbook balance must be 9600. Okay, so after reconciliation we can say that your passbook balance must be 9600, right? So in that way you have to prepare the bank reconciliation statement. Okay, now see another example. From the following particular of my super industry, prepare the bank reconciliation statement as on 31st December 2025. See given data. The bank balance as per cash book, they have given 30,000. In cash book, the balance is 30,000. Check deposited into the bank but not credited into the bank account up to 31st December is 4500. The check issued but not presented for the payment is 15000. The bank credited 5,000 for receiving the dividend through the electronic clearing system. Bank debited charges by 500. Okay. Now how to prepare the bank reconciliation statement? They have given the cash book balance. So we will start with the balance cash book. What is balance in the cash book? 30,000 is the balance in the plus. It is a plus. Okay. Plus 30,000 is the balance. Now see, one by one item we have to do the. Now see, balance is 30,000 we have written here. Next is what? Check deposited but not credited. We have assumed that whatever the checks are there, they are deposited but not credited. So we will minus it. Why? Because it is not credited with respect to the cash book. So we have to subtract it. The check issued but not presented, we have to add, right? We have issued the check but not presented, we will add it. Okay. The bank credited 5,000 into the bank account. So credited, so we will add it. Then bank has debited the charges 500. So we will subtract it. Okay. So simple thing you do. Segregate the plus and minus into the cash book. Okay. Now see, 30,000 is the opening balance. 15,000 and 5,000 we have to add. Okay. So what we are getting? We are getting the 50,000. So 50,000 must be the total. So that must be same with the minus figure also, right? Now see, what is minus? Minus 4500 minus 500. You will get minus 5,000, right? So this balance must be tally with this balance, right? So minus 5,000, 50,000 minus 5,000. So minus 45,000 should be your balance as per the passbook. So what is your balance as per the passbook? Minus 45,000. So in that way only you have to approach in the examination. So they will ask you in the examination that the balance as per the cash book is this much, this much, this much. Find out what will be the balance as per the in the passbook. Okay. So for that purpose you have to apply the rule. Cash book balance is given. So segregate plus and minus. So plus 30,000 they are given here. Okay. Now check deposited but not credited. So you will add it. Check issued but not presented. Right. Check simply see. Check deposited but not credited. So minus it. Check issued but not presented. Add it. Right. Bank credit 5,000. So simply add. Bank charges, simply subtract. Right. Only one thing. Don't get confused. Whenever check is deposited but not credited, we have to minus. So how to remember? Not here, not credited. So not credit means what? Minus. Check issued but not presented for the payment. So future it will come na. So it will be plus. In that you remember. Okay. Otherwise you may get confused in the examination. So simply do the total here. Here 50,000. Here must be the 50,000. So this minus 5,000. So the balance as per the passbook must be 50,000 minus 5,000 minus 45,000 should be the balance as per the passbook. Okay. So 45,000 should be the balance as per the passbook. Okay. Here it should be plus. Okay. So in that way you have to approach in the examination. So this is the example. You can take it as a homework. Okay. You can pause the screen, record the transaction and prepare as per the previous example. Okay. So this is the solution part. This is the correction into the cash book. This is the balance as per the cash book and this is the balance as per the bank passbook or bank statement. So friends, you can subscribe us on the YouTube Banker Zone. Join our Telegram channel. For that you can directly search Banker Zone JAIIB in the Telegram to join our group. There is one application Banker Zone JAIIB. It is available at the Play Store. Don't forget to download that application and you can get the full courses there. This is our WhatsApp number. You can reach us anytime if you have any doubts. Thank you friends.